Are you looking for more out of your trading? Are you looking for bigger gains and more consistency? In today's video, I'm going to walk you through 3 common mistakes that hold retail traders back when trading options. These are mistakes that if you can avoid, you will be well on your way to far better results in the weeks and months ahead. So let's take a look at mistake number 1, and it's not having a system in place that guides your entry and exit decisions. So many people get into trading thinking, hey, all I have to do is simply be right a few times trying to pick if the market's going to move up or down, and it's easy as that. In reality, markets are much more complex. If I take a look at this daily chart of Google, I just have some common moving averages on the chart, but there's no defined entry or exit points. If you take a look at this chart, I can probably find 5 reasons to be bullish and 5 reasons to be bearish. Right? We can have arguments on both sides, and that's what makes a market. But in reality, when markets go live and markets get volatile, it's very easy to get caught up in the emotional side and not know when to get in and when to get out. And you're left guessing what's going to happen next. Oftentimes, you're going to make the wrong decision, and I say that from experience. If you don't have a system based on numbers and based off of statistics, it's going to be very difficult to see the consistency long term. Now compare that. Let's go over to a 195-minute chart of Google. Same market, but now look, I've got some red and green dots on my chart. Look at this series of red dots that I'm circling. Those represent my entry, my 2 target levels, and a stop. We have a very disciplined set of criteria that we follow on every trade that we take. And we've programmed that into our trade calculator. So now when that criteria has been met, I have an exact roadmap that I can follow from start to finish. It's what we call our Options Swing Trader Pro program. This program is dynamic. It can work on any stock, any ETF. Here on Google, we had a bearish pattern develop. I had an exact entry point over in my data window. If I scroll down, you will see it. My entry point was at 153.19. So I know right away if it's a setup or it's not. If it's a setup, I know exactly where to get in. Not only do I know my entry point, but I've got my 2 target levels down below and my stop above. Now these levels, they're not just arbitrary numbers that we're pulling out of the sky hoping that we hit them. These are levels that are dependent on market conditions. As volatility expands, like we've seen here recently, these targets are going to be pushed out further. We're going to be able to go for larger targets. When volatility contracts, oftentimes in the summer months, you start to see slower conditions in July and early August. Well, the markets potentially are going to get choppier and slower. That doesn't mean the system breaks down, it just self-adjust, right? It starts to adjust those targets in closer. So now we can commit to taking what the market's giving us versus just picking a target and hoping that the market hits. So many times traders get in and just, they swing for the fences hoping that, hey, if I can just hit 100% return on every trade, that'd be great. Well, it would be. The markets don't make it as easy as that on us, right? We have to make sure that we're committed to taking what the market's giving us. So if we take a look at this Google trade, we got into this bearish setup. If I didn't have this system in place telling me where to get in, where to get out, look what happened in the first couple of days after we opened the position. The stock started to move back against us and moved to the upside. Without a system, without a roadmap there, I'm probably saying, should I get out? Should I take my loss, move on? Those emotions start to creep in. But because I've got this roadmap here, now I can stay very disciplined to the approach, and that discipline was rewarded. How that moved to the downside, notice how accurate that second target was. We came down, we hit that second target, and almost immediately price started to reverse back to the upside. Again, those targets are dynamic. They're really fine-tuned to current conditions. So now we were able to book our profit. We took the trade with the 155 puts. We paid $489 per contract, fully risk-defined trade. We made money if the stock moved to the downside. We were able to close this position out, book $1,000 of profit, 205% return on the trade. Now, in fairness, we have been in a market extreme. We've had big moves. We're not always going to be able to book a 200% return on a winning trade. There are going to be times when markets are slower, not as volatile. We might be looking for 50 to 100% returns. Again, we're committed to taking what the market's giving us. This system here with the Option Swing Trader Pro, you can use it on any stock or ETF. I'm showing you Google. We'll take a look at MasterCard in just a moment. You can take a look at the financials in the ETF. It gives you the flexibility to diversify into other areas and to look at different markets. The rules that we look at on every trade remain the same regardless of the market that you're looking at. We looked at a bearish position. We can also take bullish trades as well. Does not matter to us what the market's doing. This is a fully customized system that's going to set you up for long-term success. So if you don't have a system in place, highly recommend that becomes your next step, right? Look for that system that you can trust that's going to take the emotion out of the equation. It's going to allow you to take trades with a higher level of confidence and see that account growing over time. Now, mistake number 2, let's talk about size. There's so many times where I talk to retail traders and they are just swinging for the fences, hoping that, hey, if I can just hit it big a couple of times, it changes the whole ball game. That might be true, but think about the other side. If you have one losing trade where you've got all your account into that one trade, if that loses, you're out of the ball game. You can have a system that's winning 80% of the time, but if you're not using proper risk, you potentially could get wiped out before you can take advantage of those odds. Look at this trade here on Google. We are risking $489 per contract. With a $5,000 account, yes, theoretically, you can take this trade with 10 contracts. And in this case, it would have worked out in a big, big way. But what happens if this trade loses? You've got your entire account on the line. Now you're out of the game. We recommend keeping your risk between 2 and 5% of your account on every trade. That way, if you have a losing trade, it still hurts, but it's not going to wipe you out. You can live to fight another day. Keeping that risk small allows you to stay more disciplined to the system. If you've got too much risk on the table, now all of a sudden it's harder to stay disciplined. You start to overreact to every little move back and forth out of that fear of losing money. Keeping that risk small, focus on long-term consistency. That's going to set you up to be around for the long haul. You're not going to be one of those retail traders that's in and out in a month and they're done. Right? We want to focus on keeping that risk small. So 2 to 5% of your account per trade, highly recommend you stay in those risk parameters. And then the third and final mistake that I see people make is they just commit to one strategy, just buying individual calls and puts. And as we can see here, it can pay off in a big way when those trades work. But what happens when the markets change? What happens if we get into a choppy environment? Right? We want to make sure that we're taking full advantage of the flexibility that options give us. If I take a look at MasterCard, the same system, same 195-minute chart, and we had a bearish trade right here. Just like Google, everything's outlined for us. We had our entry, 2 target levels, stop up above. But when I looked at this trade, number one, I didn't like how expensive the options were. It's an expensive stock. And I also wanted to have a more forgiving trade. I didn't want to put myself into a position that was solely dependent on the market making a big move in my favor. Right? If you buy a call or a put, you need those directional moves in your favor. That's the only way you can make money. But there's other option strategies out there that are going to give you a higher probability of success, a more forgiving trade. So here on MasterCard, instead of buying the long put, we came in and we sold the 555, 557.5 call spread. All that meant is I was trading 2 options at the same time. I collected $85 per spread, risking $165 of my capital per spread, still a fully risk-defined trade. I know what my max risk is right up front. But instead of only having one way of making money, we had 5 ways of making money on this trade. We made money if the stock moved up, down, or sideways as long as it stayed below 555. We also made money from time decay adding up and from volatility decreasing. Any combination of those 5 is going to allow me to make money on the position. Now, in this case, we did get the move to the downside. We were able to book the profit. It was a smaller profit. We booked a $37 profit per spread. It's a 22% return on my capital in a couple of days, fully risk-defined trade with 5 ways of making money on the position. It's another $74 profit if risking $500 per trade. The reason I love these types of trades is because it takes the pressure off needing to be right directionally on every trade. That pressure adds up. I've been there. I've traded now for over 20 years. I know the pressure that's there when you have to pick whether the market's going to move up or down, and you're doing that week after week. With this type of strategy, if you want to be more conservative, maybe you don't have as strong of a directional opinion, put on a credit spread. It allows you to stay active, fully risk-defined trade, keep the risk small, stay disciplined to the system, all things that we just got done talking about over the past 10 minutes. You're going to set yourself up for far better success long term. It's nothing overly complex. We're not talking about a highly advanced strategy. All we're talking about doing is trading 2 options at the same time. If you're one of those traders that has only been focused on buying calls and puts, highly recommend that you take a look at selling a vertical spread, in this case, selling a credit spread. Very powerful strategy. It can be a great complement to what you're doing. It's going to help with your performance over time. So guys, those are the 3 mistakes. I've worked with hundreds of traders here over the past few months. Those are the 3 top mistakes that I see people making that are holding them back from becoming successful with their options trading. If you have any questions on those or would like to discuss that in more detail, feel free to post a comment here on the video, or you can always email us, info@netpicks.com. We will also be holding a live webinar coming up next week where we're going to talk you through in more detail how this Options Swing Trading Pro program works. You can actually get your hands on it here next week. Really excited about it. It's a system that I have used now to generate close to a 90% win rate over the past few months. So it's a great system. It's a game changer for many people. So just click on the link below and we'll get you signed up for the webinar next week. We will teach you the system in more detail. All right, I'll wrap this video up here. Enjoy the rest of your day, guys, and I'll be back with you over the next few days with our next video.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.